Let's start with chapter 7 revision, books of prime entry. Now, this chapter should have been ideally the first chapter, but nonetheless, let's go ahead with it. So, there are 7 books of prime entries. Books of prime entries are basically books of original entry or a subsidiary books. So, let's read it. In chapter 4, it was explained how the ledger is divided into specialist areas and how the cash and bank account are usually maintained in a cash book rather than in the ledger. Business uses books of prime entry to record goods sold on credit, goods purchased on credit, sales returns, and purchase returns. So, there are 4 books that they've mentioned here just now. These books are basically listing devices, grouping similar types of transactions, which is useful when posting it to the ledger. So basically, they are just listing all your credit sales, credit purchase returns together in one different books. The use of these books means that a lot of detail is removed from the ledger. It also means that the bookkeeping can be divided between several people. This is the advantage, okay, of maintaining the books of prime entry. Books of prime entry assist in collating and summarizing of accounting information and are useful when preparing control accounts. This is another advantage, that books of prime entry are also beneficial while preparing the control accounts. When we'll do the control accounts chapter, we'll come to know. Books of prime entry are also known as books of original entry or subsidiary books. The name of these books has arisen because of all the transactions should be recorded in one of these books before they are entered in the ledger, which is double entry bookkeeping system. So, how many books of prime entries? Cash book, petty cash book, sales journal, purchase journal, sales return journal, purchase return journal, and general journal. So 1, 2, 3, 4, 5, 6, 7. Now cash book and petty cash book is not only the books of prime entry but are also the ledger books. Sales journal, purchase journal, sales return journal, purchase return journal, as the name suggests, talks about only the purchase, sales return. And other than that, other than this 6 books, whatever happens comes into the journal. Okay. So the cash book, all the cash receipts and payments can come. Petty cash book, anything related to the petty cash receipt and petty cash payment comes. Sales journal records credit sales, purchase journal credit purchase, sales return journal sales return, purchase returns journal purchase return. So what does journal record? General journal records everything else. Okay, so I will straight away see if they have mentioned about the journal here straight away. Oh, okay. So journal is basically covered in your chapter 15, that is errors and journal. So journal basically I will just still give you a brief here in this chapter itself. It records your in transfers, opening journal entries. Then it gives you your unusual transactions like your purchase of non-current assets on credit, or passing of a depreciation entry, passing of a provision for bad debts entry, passing any entry related to the suspense account, passing any correction of errors. All these things comes into the journal. Okay, so let's see what is the format of the sales journal. That's the sales journal. So the Vivek Shade sales journal looks like for the month of April that they have sold goods to Sue and Sue, Fine Furnishing, Jafar, Transfer. Okay, these 3 clients, these are the invoice number. If you see, they are in serial order. If it's given in the exam, you write. If it's not given, you don't write. Folio number is also, if it's given, you write. Otherwise, you can skip it. Basically, it tells that on sales ledger, page number 22, you will find Sue and Sue's account. Sales ledger, page 14, you will find Fine Furnishings account. It's like an index. Okay, and what is the amount? Like if you remember, 408 was the sale amount, right? 450 minus 48 was the trade discount. So 408 is the price at which the goods are sold to Sue and Sue. Okay, Fine Furnishing 750, Jaffer and Company 220. If you see the sales return journal from Sue and Sue, the goods worth $48 had come back, and that's what is mentioned here. Okay, so that's for the, and this is recorded through the credit note. So that's why see 529 and 530, it's not a debit note, it's a credit note, remember. Okay, now let's see the sales ledger. So from this primary books, the sales ledger, first we see the Sue and Sue account. 408 is recorded on the debit side, and Sue and Sue sales return 48 is recorded on the credit side. Same is within the sales ledger. Fine furnishing account, that's fine furnishing. The goods are sold of $750. There is no return. So fine furnishing $750. And Jafar and Company, sales of 220, and there is a return of 10. This is only one effect, that is the one side effect of the transaction. In the nominal ledger in sales account, there is a total credit sales for the month, which is 1378, which has come from here. So this customer's account are in the sales ledger, and transfer to the sales account is gone to the sales ledger. Similar with the sales return journal, the returns have gone to the sales to the customer's account respectively on the credit side, and sales return is on the debit side of the sales return account as a $58. I have discussed the sales journal and sales return journal. Purchase journal and purchase return journal is identical, does not require any further explanation. Okay, you all are already, you know how to work on that. Okay, and that completes the chapter. I'll just do the revision for you. All transactions should be entered in the book of prime entry before they are entered in the ledger. The sales journal is, so primary books like these journals are not part of double entry bookkeeping system. Please remember that. The sales journal is written up from copies of invoices sent to the customers, and then the sales return journal is written up from the copies of credit notes sent to the customers. The purchase journal is written up from invoices received from the suppliers, and the purchase return journal is written up from credit notes received from suppliers. At the end of each month, the total of the sales, purchase and return journals are transferred to the sales, purchase and returns account respectively in the nominal ledger. That completes your chapter 7. Hope I am helping you somewhere. Thank you.